Hi everyone, happy Friday. Anne McCabe here with Curo Private Wealth. Today, let's talk about the market volatility that came back this week in a big way. But first, let's talk about why we saw an increase in volatility. In my opinion, there were three main reasons that caused the sell-off this week. Number one, the Japanese carry trade. What on earth is that? In basic terms, interest rates were stuck at zero in Japan for a long time. So investors would borrow cheap yen and then turn around and invest those funds in higher yielding assets in countries with predictable returns, like here in the US with our stocks and bond market. Now, Japanese Federal Reserve raised interest rates last week, making this approach less attractive. Mainly hedge funds were impacted by this, but it has gotten a lot of attention. Number two, on Friday here in the US, the unemployment rate unexpectedly rose from 4.1 to 4.3%, triggering the so-called SOM rule, which is a recession indicator. It's important to note, though, that the unemployment rate increased because of an increase in the labor force, not because we're seeing tons of layoffs. Claudia Sahm herself, the inventor of this rule, has said she does not believe we are in a recession. Number three, we are in earnings season, and so far we've gotten some disappointing AI results from companies like Microsoft and Amazon. Then we unexpectedly heard that Buffett chopped his Apple position in half. So this confluence of events finally made bad news bad news. So what is an investor to do when we experience volatility like this? Remember, volatility is normal. In fact, since 1980, the average intra-year sell-off that we've seen in the S&P 500 has been about 14%. Yet, in 33 of the last 44 years, that's 75% of the time, the market ends in the positive. Number two, remember the time horizon for this money. You are likely and hopefully using these investments for goals that you're working towards years and maybe even decades in the future, not for goals this week or even next year. Side note, if you are working on goals this year or next, that money should be parked in pretty safe cash. So let's not make short-term rash decisions around long-term goals we are working towards. Number three, turn off the noise if you have to. If you find yourself stressing out too much or feeling the urge to do something like selling and go to cash, when likely the best decision is for you to do nothing, then just mute the news for a while. And number four, we want you to think of these market sell-offs as great companies going on sale. If you have too much cash, consider using these pullbacks as an opportunity to put some of that money to work. So what do you do to get through market volatility? We'd love to hear from you, so please drop a comment below. Thank you for taking the time to watch this. Have a great weekend, and I'll see you back here next week. Take care.